Each morning, real RSI setups are broken down with entry strategies and the technical reasoning behind every trade. This is RSI Trade of the Day with Verified Investing.
Welcome to the RSI Trade of the Day. My name is Benjamin Poole, head trader here at Verified Investing. I want to say thank you guys for starting your morning out with me at 8:45. Please, if you guys are enjoying this kind of content, make sure you like, follow, subscribe. I've got a couple different stocks that I'm going to go over. Some are really high flyers that I'm going to get into. I actually have a couple of those charts. You guys don't want to miss this. And then towards the end, there were a couple good names that are now getting beat up, that are getting into some really key technical levels that you guys want the setups for that as well. So please stay tuned. Now let's go into the RSI Trade of the Day recap from yesterday. So here we have a chart of HIMS. Sorry, not HIMS. We were UPST. UPST got up to our level. My short level was $52.36. It did get a little bit of a pullback from that level. $51.75 is where it's currently trading. If you notice what happened, though, on the RSI intraday, it got above this level quite substantially, $53.43. And then towards the end of the day, we did get a decent sell-off. Price action got below $52.63, and now again is trading at $51.74. I wouldn't consider this a win because on a 15-minute closing basis, if you go to the 15-minute time frame, it did close above that level on a 15-minute closing basis, so that would have stopped us out. However, it would have eventually played out. I like to be a little bit more conservative on this. Okay, so OKLO, look at this selling pressure. This is a stock that I was looking at in the morning session to potentially go long. Watch the RSI. It stayed along the between the 30 and the 70, but closer towards the 30 than around the 70. This is telling you that there is a lot of selling pressure in OKLO. One of the reasons that I ended up staying away from this particular stock, if you go to the daily time frame on OKLO, this was a high flyer. Look at the pullback from $194 all the way down, trading at $133. 33% discount on this stock. It's getting into a support level right here at $127.36. This would be where I would go long on a day trade today, $127.36. What I'm really liking about this chart is you're starting to get a lot more volatility in this thing. With the RSI, what I would look for, or what I'm going to be looking for a swing trade, is price action to get below the 50, get around the 45, 46. Hopefully price action get probably around 120, 119 bucks. This would be a swing long for me. It's got great support, great volatility, great momentum stock. This would be an opportunity for a 10 to 15, 20, even 30% move to the upside. GM stock, this was an incredible move yesterday on the back of earnings. When I decided to get into this, so I ended up trading this with a live day trading room. Look at what happened with the price action. Price action headed higher, did this bull flag, moved up a little bit more, created a little bit more of a bull flag. So I was shorting this thing, adding every time it headed higher. We were slightly in the money at one point, but look at what happened with the RSI. This is telling you that there's a lot of buying pressure in this stock. Now, let's switch to the daily time frame on GM. This stock is now being overextended. So for me, $70.04 is the max upside of GM. Notice how when you get some volatility in this stock, the RSI dips below the 50, gets down to 33, almost to the 30, but then once it gets above the 70, it indicates that it's overbought. This is going to be where it's going to pull back, $70.04. This is actually my RSI trade of the day. Let's go ahead and play that zinger. All right, so my RSI trade of the day is shorting GM at $70.04. My stop out level is a close above $70.04 on a 15-minute closing basis. This could be a great swing trade level as well. And based on the fact that it was up over 15% yesterday, if it gets up to $70.04, I will be looking for a 3 to 5% pullback as a day trade. when I trade this as a day trade, I'm going heavier than I would on a swing trading basis. So that's why I would go a little bit heavier and look for a 3 to 4% pullback. If you're in this for a swing trade, I would go like 2, maybe 3% of your portfolio. And then again, a stop out above that $70.04. You could stop out if you wanted to be a little bit more conservative, or look for a continuation move or a move up to about $75 or $80 and then add to the position. Bring your average cost up on this trade. Next chart I wanted to talk about is HIMS. I'm looking at replaying this. Look at what happened to HIMS. Similar price action. You had this nice up move, but then this fade throughout the morning session into the afternoon session. And now HIMS is getting beaten up even more, down to $48.84. The RSI told you that there's no buying pressure in this. It's not getting above the 70 and then continued the up move, which means that there's continual selling pressure. My level is still $47.78. I'm looking to day trade HIMS. Swing trade basis, $46.89. That is where I'm looking to swing trade HIMS. What I like is the RSI is now peaking below the 50 and getting down to close to about the 40. The volatility in this stock gives you a good indication of how the people who are playing the stock can react. And so once it gets a little bit more oversold, then you can get a nice rebound in HIMS. MP is another stock that's beaten up. It was a high flyer. This is something I want you guys to really pay attention to. The 1 minute RSI. Look at this. Had this nice drop in the morning session. Had a nice little pop. This was probably a 3% bounce. And then what happened is the RSI stayed below the 70, never got back above there. And then the price action as well as the RSI continued lower. Even though it was putting in some positive RSI divergence, the selling pressure was just too great. And now it's trading at $71.28. Now, if you go to the daily time frame, it is getting into a lot of support. So I know in the last couple of days, I've been talking about all these short plays that we were looking at. It's because these stocks were overbought. And so that's when I take a look at. Now we're getting into the other end where we're getting 30, 40% pullbacks in some of these high flyers. And so these are going to be really key support levels that you should, it's likely to get a bounce off of. And so MP is a great example of how the relative strength index, the RSI, is a really good indication of how price action is going to move based on support levels or resistance levels. So if it gets down to $70.59, this is going to be a key gap fill in MP. And then you've also got this upswing trend line right here. So it could go down all the way below the 70, get down to $68.38. But I would say that short term, this is a great opportunity for a bounce. So this would be my first level, $70.59. Secondary level is $68.38. Dollar cost average into this and take a nice move to the upside. Newmont Mining, price action stayed really weak throughout the morning session, faded into the end of the morning session, into the afternoon session. Look at the RSI, never really got above the 70 with taking out any pivots. So for me, it favored a move to the downside, and look at where Newmont Mining is trading. This is how you guys can save your accounts. If you see negative sentiment in a stock, it allows you to stop out, even though it's oversold intraday, doesn't mean that it's going to bounce. And Newmont Mining didn't bounce. Its next support level is going to be $81.76 for a long play. For me, more of a swing trade basis, a Pierce of $80 and could go down to $78.32. Now that you're getting some volatility in the RSI as well as the price action, you should get support at Pierce of $80 and all the way down to $78.32. You start breaking these two key support levels and you could head all the way down to $70, which would be a catastrophic sell-off, be almost a 30% fall from the highs on Newmont. It's absolutely incredible. Another stock that I want to go over is APH. This will be the last stock of the day that I go over. If you look at APH, it had earnings, and so this is why it's popping. It got up to $137.46. look at what happens. You can have some negative sentiment or negative RSI divergence for an extended period of time. So starting in May, you had this peak of 83 on the RSI. You have the down move on the RSI continuation until the 21st of October. On a technical basis, this is negative divergence. Negative divergence means that you've got a lower RSI with higher price action. And then the price just continued to move up. So without any volatility, the momentum is going to stay with the stock, even if it's giving you negative divergence. So my level would be a pierce of $140 for a potential short. This, now that we're starting to get some volatility, this is up on the day, 12%. Volatility is what gives you an indication of how fear and greed can enter the markets. So $140 is likely where the upside move is for APH. Again, there's not a lot of volatility. There's not a lot of indication telling you how the buyers or sellers are reacting in this. And so the buyers just can keep pushing this up if there's not too many sellers stepping up to push that price down. So keep your eyes on the RSI and the volatility. Combine those things together, and you can get an idea of how price action is going to respond on support and resistance levels. So thank you guys so much for watching. Again, my name is Benjamin Poole. Hope you guys enjoyed this. Please make sure you're sharing with your friends, you're liking, you're commenting, and you're subscribing. And also stay tuned. My training game plan with Gareth Soloway is going live in less than 4 minutes. You guys don't want to miss that. We'll see you guys next time in the charts. You guys have a great rest of your day. Take care.